So Peter, one of the most popular trades we've seen amongst the short community against China, i.e. people who are betting against Chinese stocks, has been shorting the banking sector. So betting against the likes of Bank of China, ICBC, Agricultural Bank of China, etc., because they fear that the Chinese banking sector could even collapse. How realistic is that assumption, especially because Chinese banks are extremely cheap at the moment, maybe 7, 6, 7, 8 times earnings with 5 or 6% dividend yields in some cases. How likely is a real big sharp decline in Chinese banking stocks or even a banking collapse likely to happen?
I think the possibility or the likelihood of a banking sector collapse is very remote indeed. There are several reasons for this. Firstly, bear in mind that the top 5 banks in China are still controlled very largely by the government. The ownership rests in the hands of the government. So the government basically dictates what these banks can and can't do. So if there is an issue with non-performing loans and the banks need new capital can be injected very quickly and very easily, both from the government sector and also from the investing public. So that, I think, is not a big risk. Secondly, if you think about it, most of these banks have very high reserve ratio requirements. For example, they're required to hold 20 to 22% of their assets in government bonds, safe government bonds. These reserve ratio requirements in the Western world are much lower than that. So the banks in China have a very healthy reserve ratio cushion in China, which doesn't exist in many places around the world. So with the fact also, if we do get a surge in non-performing loans, as we've seen in the past, the Chinese government has something in the order of $3 trillion of reserves. They can easily take non-performing loans off the bank's balance sheets, which they've done before, and put them into special asset management vehicles which are controlled by government, and then they can sell down those loans or those assets over time. That's exactly what happened in some other countries in the Asian financial crisis, and basically is what's happening in the US over the last 4, 5, 6 years. So I think the chances of a collapse for all these reasons, I think, is very slight indeed. But yes, there is a risk that the banks will feel some pain. There may be some pain in the sense of earnings may not be so buoyant as we might expect, but already these banks, as you say, are extremely cheap. A lot of them have been trading at about 0.8, 0.9 times book value, which is it was a big discount to their underlying assets. And as you say, their price-earnings ratios are also very cheap, way cheaper than anything else we see in the Western world, except in banks that are looking like they're going to collapse. And I don't think these big 5 banks in China are going to collapse. They are government controlled.